by TradeView Markets. A very unique day. We get to talk to 50 Pips, and 50, this is his stage name in the business, and I respect his desire to remain anonymous. I've been in the public eye long enough to know that maybe I should have done the same thing. But 50, what a great occasion to be able to talk to you. It's been years.
Thank you so much, Dale. I'm so happy to do this. I usually hold a webinar when you're doing yours, so we haven't always had time to do many of these, but it's, as I said before, I'm super happy to see you doing these and super happy to be here. So thank you so much for inviting me on.
Yeah, and here's just a look at 50's blog here. So you know where you could find him. And 50, yeah, I go back and I ask people about their journeys and how they got here. And there's so much going on in the markets. In fact, I haven't heard the word unprecedented used more in an unprecedented way. What was your first gig before you got into the trading business, and how did it happen?
I've always been interested in trading. So I was always trading on the side since my teens. But after
Wow.
I finished college, I started working in consulting, in industrial consulting and strategic consulting business. And, I worked the normal corporate life, the, 100
Right.
plus hours a week for many
Wow.
years, enjoying it,
Yeah.
loving it. I had a great time, but after a while, I just wanted to do something myself. I'd always had the trading bug, and I wasn't married. I didn't have any kids, so I thought, what's the worst thing that can happen, right? I've got good degree, got a good CV. Worst, it doesn't work out. It doesn't work out, and to my amazement, it was funny because when I went to see all my bosses or clients, everybody told me the same thing. Oh, I wish I'd done that.
Yeah.
every single one of them. So, and then I started, I set up a private investment partnership and we started trading.
Were you successful in high school more with the markets or with the girls?
Probably neither with the markets nor the girl. More, I was very focused on music. So
Oh, okay.
girls were there, but my main focus was music.
You ever hear of the band The Hands of Time?
No.
Oh, well, I didn't think so. That was my junior high band. So
Okay. But I've heard
anyway,
you play. I've heard you play live.
yeah, I'm a legend in my own mind as an entertainer. But you know what is really of value to people that watch us, 50, is talking about the things and the landmines that we have stepped on in our own careers and help them avoid doing the same thing. I know sometimes people just have to go through it, but if you could point it out, and I know that's what you do, now you're actually, you're doing a lot of teaching along with sharing your signals in the market. Um, do you feel even better about seeing someone that you have mentored trading well than even your own? Because I've experienced that.
I mean, of course, I'm happy if somebody I work with or I know is trading well, but it's an interesting question. The first thing I was going to say, which probably is not ideal, but I'm going to say it anyway because I'm I speak the truth. I think you can lead a horse to water, but you can't make it drink. So I think sometimes is, of course, you're happy if somebody you work with trades well, but it's not like, I don't feel it's really thanks to me. The only thing I'm doing is, I'm pointing out mistakes I've made. Like Buffett says, it's good to learn from others people's mistakes, but the problem is you have to go through that journey and you have to make the mistakes yourself, and somebody can help you. But ultimately, when somebody trades well, it's all on them, right?
Yes.
So of course, I'm very happy Yeah, probably more so than myself because I'm very, I've been numbed by the market. So it's not like at home, nobody would really tell if I had a great day or a bad
It's
day.
just that some of my teachings that I've taught, people have a better psychological profile to make it work even better for them. One of my habits is not to let profits run. I like to go to the door and put it in the bank, and then windfalls at times get away from me. And people that have a different paradigm can ride those trades to objectives. Someone once said to me, Dale, why do you why do you post a target? You never hold it till then anyway. And you know what? A lot of them get there.
Yeah, but it's
So
your trade. I think there's two things. One is, I hesitated with to answer your first question because for me, happy in trading it's strange because to me, if you're trading well, it's absolutely mechanical and boring, right? So I always say no trade is going to change my life for the better, for the worse.
It's just another trade.
Yeah, it's just another trade. So to me, it's almost like good trading, or it's just mechanical. The work's done before, but if you're trading well, I don't know, maybe it's also part of, these trader things that if I feel like if I'm ever happy for my trading or somebody else's trading, I'm going to jinx it and the gods are going to come. Yeah. So
you're right. I mean, I agree.
Neutral with those kind of statements. And the other thing I would say on what you were saying, that you don't hold them, I think the whole industry, or maybe people have this obsession with wanting to tell people what instrument you should trade, how you should trade, how you should size your position, where you should take profit, yada yada yada. It's
an individual
forget
thing.
That. It's whatever works for you. The important thing is to be here to fight another day, to be here tomorrow. Then you have to tailor your trading to whatever suits you, your personality, your risk reward profile, your account size, your private, a bunch of things.
Your personality, 50, Jack Schwager, who's interviewed a few good traders. I once asked him the most important advice he could give a trader. And he said, have them find a style that suits their personality. And, that's a process, the type of asset class you trade, your time frame. So you're right. Everyone
it's a process, and it's something that can change over time because something that can suit you in your 20s might not suit you in your 40s, right?
Yeah, but quite a few things.
Look at most people,
things.
Even
now
aggressive
that I'm in my
people
40s,
who start off scalping and trade well.
Yeah.
You can't do that forever. Inevitably, you're going to default to higher time frames, different. So, the main message to me is there's no right or wrong. It's just don't blow up and don't, 99.9% of the problems are going to be cured with leverage. If you trade small enough, you actually have to be a champion to blow your account. It's very hard to blow your account if you're not trading with leverage. So
great point.
Keep your leverage down, give yourself time to learn, and then just do whatever.
Let your trades breathe.
Whatever you want. If you want to scalp. If you want to trade moving averages, trade. If you want to scalp for 5 pips, if you want to go for bigger move, there's no right or wrong. That's I think that's the message. Nobody gets brownie points by convincing somebody that the way they trade is right or wrong. And if the way you trade makes you money, what's the point of having to convince somebody else?
Yeah,
it works
exactly. And you have your track record to show it anyway if someone wants to see results. So so when you came into the financial social media world and you were coming up with a handle, why 50 pips?
I really can't properly remember. I'm sure I've told the story and I think it was
that's great.
It was probably a combination of me listening to a lot of 50 Cents and the market's moving a lot and we were just kind of messing around and like trying to book 50 pips live on my stream. Because before a lot of crazies showed up, I used to call, I think for the first couple of years, I used to call all my trades live on Twitter.
Okay. Yeah.
And then it got bigger and a lot of strange people. So I stopped calling all my trades. Yeah. And so it was a combination of trying to book 50 pips, but you know, the market was moving a lot more back then. And
50 would happen in 10 minutes. Yeah. Do you think there's volatility that can return to FX? It seems to be picking up a bit.
Yeah, I mean, I think everything in life and in markets is cycles, right? So I'm sure the vol is going to come back.
Certainly did in the end.
But I'm not sure. Well, the answer to everything is sure, anything's possible. I don't know, but I wouldn't be surprised if it doesn't really come back in the way we used to have it, simply because of the nature of where we are with the central banks and rates. So we might get bursts of volatility, but broadly speaking, maybe stuff staying in range, breaking out, readjusting in a new range. I'm not sure it's going to go back to what it was before.
Okay.
But ultimately, as a lot of people know, my answer will be, I don't have a crystal ball, and ultimately I don't care because I don't get to choose the hand I'm dealt. So I'll trade whatever happens.
Okay, so maybe we could talk about levels and possible turning points. And I went to your stream, and I know that 105 was an important number for you in the euro. Has that changed? And what are the important levels now on a closing basis? Looks to me like if we could just clear 106
on the euro, I think what's interesting is you can see this on first of all, broadly speaking, if we want to keep it very open, it's like you've got the market is trying to base at this 104, 105, right?
Yeah.
And you can kind of, people are going to think this is heresy, but you can kind of equate that to 3650, 3700 on the ES, right? And we're trying to base there. And what's interesting, if you look at the euro there, is that basically you've got that 3-day pattern. You see where we broke on the 12th of May, we made a low, right? And then you've got a kind of like that basing pattern. You're on a 4-hour chart. Could you get on a 1-hour chart, please?
Sure.
It's easier to see. Sorry, on a daily chart. Sorry.
Okay.
So you can see
about this low.
Right where you have that low on the 12th of May, you've got that 3-day basing pattern, three green days, blue days.
Yeah.
And you've got the same thing just happened, you know, on the 14th of June.
Yes.
So you see that there's really strong support building there. And then inevitably, every time we get there, you get the usual, again, people are going to hate me for this, but the kind of Anglo-Saxon world that starts to talk about euros going to zero. Euro is a failed project. That we hate euro. Euro has to die. The usual thing, right?
Parity.
And
forever.
At the bottom line is they've been calling euro under 1 for ages, but ultimately, who cares? Because that's not really tradable here. Let's look at one thing at a time. And I think that fundamentals aside, you know, whether ECB is going to have to do something. They're going to have to raise rates. When they raise rate, everybody's going to say, oh, we're so surprised, even though they tell them and we see this pop. But for now, the only objective thing we know is that we're playing ping pong inside this 104, 105. And every time we poke our head below 104, the market is unable to attract new sellers. That's a fact, right?
So far.
Yeah. So
do you think there's a few sell stops under these levels, and could a stop hunt still be possible?
You see how it's not a clear low below those numbers?
Yeah.
So it means that it's fishing for sell stops, it's fishing for stops, but it's not attracting any real follow through.
Okay.
So I think here the risk is that as long as we don't we can't get a daily close below that 104, we're going to be trading back towards that 108. And the 108 is the pivotal level inside the 112, 104 range. So you've got 400 pips to the upside and the downside at that 108.
Yeah.
And that's the pivot. So it's a range trade now, but that's all it is. I mean, again, full disclosure, I'm long euro. So, but if we get a day close below that 104, or you start seeing it's attracting new sellers below that 104, then you have to be short, right? You cannot stay long euro if it's attracting new sellers below that 104. But right now, it's trying to hold. And what you can see also, if you, I see you've got a 9 MA on there. I use the 10, but it's similar. You see these past couple of days, how it's trying to base, and you've got buyers protecting that 10-day or that 9-day.
Yeah.
And that's a key level for shorter term trading, shorter term systems. So you can also see there that you've got that confluence of that 105, that 10-day moving average. Incidentally, that's where we based for about 10, 12 days from the end of April into that flush in May that couldn't get any traction.
Right.
So here, what I like to say is, in terms of from the current location, in terms of velocity of move, I think the pot odds are for the market to be surprised with velocity of move jammed into the 108.
Yeah.
As long as it's holding the support. Then what's going to happen at 108? Who knows? Because if it's just a technical squeeze, okay. If it's on ECB raising rates and Lagarde going full crazy hawk, whatever, then we could blow through and be in 112 before anybody can blink. And we can easily get all the way back into the 112 and we hold the long-term downtrend to move back lower. And that's probably even healthier if you're long-term structurally bearish, because it can move in a freer, more healthier way back down. But right now, it's
still a pretty one-sided, trade. In fact, 2 weeks ago, the DSI level, which is a sentiment index, was down to single digits on the euro, a 7 reading, which you usually don't see. That means 93% bears on the euro. And I think we've bounced to about, 17. But the dollar on the long side is still the crowded part of the trade. Do you agree?
Yeah, I mean, I think the one thing which I always tell people is, or the guys who are in my webinar stuff, is like, as traders, of course it makes sense. You can be very familiar with an instrument and you get to know its ebb and flows and stuff like that, especially if you're trading certain commodities or things. But ultimately, we're in front of the charts all day, and a pattern is a pattern, right?
Yeah.
So instead of being focused on only trading one instrument or one thing, try to find first of all, what is moving, what is offering the best risk reward, and what is the best use of capital. And even though I have a small long on euro, I have a small short on yen as a lottery ticket trade on USD JPY.
I was going to, because I saw this in your feed too.
Yeah.
And I don't know if you were pointing out the divergence at this new high, but you had some type of tactical trade setting up for you.
Well, before yet, it's kind of, when you've got a VIX above 30 and you've got ES ramping around, moving 80 to 100 handles a day with technical turns where you can trade it with a 5-10 point stop. Why would I lock up any capital aggressively trying to trade FX that's not moving when I've got those kind of moves on the ES, right? You see what I mean?
Yeah.
But going back to yen I think is interesting because you've got yourself you've got a chance to get yourself some optionality on a lottery ticket trade. So what does it mean here? The way it's trading around the 135, and we traded the same trade at the 130. So we said at the 130, we're looking at it stalling there, right?
Yeah.
In the middle of May, we said above 130, it makes zero sense to be short yen, because this, you can wake up one morning and this is up 300 pips. But every day during the EU-US session, it's trading below 30, short with a stop above recent high, is giving you a chance for a beautiful lottery ticket back into the 126, which is the previous pivotal level. And now we've got exactly the same trade unfold at 135. It makes zero sense to be short USD JPY above 135, especially overnight, because you can wake up to something stupid. But as long as it's breaking above and failing back below, all of a sudden you've got a symmetry to get yourself into a short with a very tight stop with a possible, very high risk reward. You've got an air pocket all the way back into the 130. But you don't know, if something stupid happens, you can wake up to a kind of SMB kind of stuff. It can't be your base case assumption. But when you've got trades which give you this huge asymmetry, if you size your position correctly, meaning very small, you don't need to be big, but they're very interesting trades to have on, even tactically, right? So I think here, it's the similar, as long, you can't be short into strength, but you can be tactically short into weakness, because if it flushes, it's going to flush. Everybody, their grandmother and their pet goldfish is long USD JPY, right?
Yes.
Because it's free money all the way into 150. What could happen?
Yeah.
Well, every time I see a trade like this and I can structure some kind of short exposure, risking X to make 10 times X or more, I'll give it a shot every day, right? Especially if everybody's convinced it can only go in one direction.
Right. What happened was the Fed raised rates and yields peaked. And I don't know if you use the 10-year yield yen analogy, but they run pretty close. I'd call it 90%.
That's a beautiful pattern. And by the way, if you want to look at that, because maybe some people get confused with the yield, bring up the ZN chart. So the 10-year, the future chart, please.
Okay, I don't have it up. ZN, right? 10-year notes. Got a nice breakout going on there after a wave 5 down. Here you go. Yeah,
look. So go count back. So 1, 2, 3, 4, 5, 6, 7, 8. But basically, it's the 13th of June. You see the low?
Yeah.
So let's talk about it let's not make it complicated, right? So on that 13th of June, you had the market that sold off hard and then closed off the lows on the 13th with that little wick to the downside, right?
Yeah. This
one. On the 13th. The next day, the market tries to rally and it closes on the lows, just smash.
Right.
So very heavy close. The following day, the market tries to rally, they smash it down, it leaves a wick to the upside. So second day in a row, it can't attract any new buyers on a press higher and it closes off the highs. And then bam, look at that. They smash it all the way down. They come into the lows of those previous 2 days. They can't attract any seller. They can't clear the low, which should have been like taking candy from kids, flush that low. And we close back higher than the previous 2-day closes.
That's a signal.
I mean, I can't remember if I talked about it on Twitter, but we were talking on the web again. It's very rare that, forget what the yield should be, forget what the Fed is doing, forget what, that is not something you want to be short into. So of course you can overlay that with discussion on the yen.
Yeah.
But if there's a trade, if there's a chart, I'm not saying you have to get long if you don't want to, but if there's a chart you do not want to stay short, that after that 4-day action. And you see here, you've got bam, beautiful move. It's coming right back into that 50-day, right? Yeah.
We're going to 125.
By the way, look what's very interesting. If you put your cursor on the 9th of May, you see that exactly that low. if the break was solid, you probably would have seen sellers coming in defending that break. We've just flushed through that straight into the 50s. So here the risk is that we're going back into that 120, right?
Yeah.
And then that 120 mark is going to be pivotal for either a lot more upside or not. By the way, you also have that gap still open, 119.27. So again, it's also another reason, it's, you're seeing all these charts are in sync. So, it also makes sense that, this dollar should come off a little bit. Also, if you see the way the dollar traded on FOMC, so on the 15th, it tried to take out those highs and then it couldn't, right? It couldn't on all the wheeling and dealing, and it came back down. And also the DXY chart is very interesting. If you go on a weekly and you zoom out, a little bit.
Where to 2018? I could on the monthly, if that's what you're
just with your mouse, go back. If you just, exactly. Do it a little bit more, even more.
Well, this is 20. This is
you've got a 26. Yeah, exactly. So you've got that. No, you're on a monthly. Can you get on a weekly with that kind of zoom?
I don't know how to do that, but can we talk about the weekly? So there was some type of level all the way back when?
Yeah, basically it's the 26 December 2017, December 2016, December 2017 is you've got that high, which is like 103.80s.
Okay.
And it's kind of trying to bounce off that. It's holding that, but this is setting up for, for potentially a very nice move. And as long as it doesn't trade below 103, the bulls are okay. Yeah. If it trades below the 103, that's also the 10-week moving average coming in there. And that's
an important
previous
bull bear
resistance
line
from 2020. It could really flush.
All right. So that's a real key bull bear line because, I believe that the dollar is the fulcrum of the wheel. And, I'm sure you've noticed that it's all been one market, right? So when the dollar is strong, the market is weak. When the market is strong, everything's strong. But we've been in basically everything has been weak. Bonds, stocks, metals, crypto, just in different types of magnitude, right? And the thing that's held up the best, I think, with all the carnage, has been gold.
What do you think? Well, strong dollar breaks the world. Yeah. And the other thing is, I think what we have to make a distinction here shorter term is that now what we're likely seeing is an attempt for a technical bounce in risk, right? So
yes,
full disclosure, I'm also long ES. I'm looking for a move to fill the 3,900 gap. If it gets stupid, I wouldn't be surprised to see this all the way back into the 4,100, 4,200. But it doesn't mean that the broader term outlook changes. Here, we're just in a technical bounce. We're going into the end of June. End of June seasonals are fairly bullish the last 5 days of trade. If we start squeezing and rallying, who's going to want to short it in size ahead of the 4th of July weekend? So it opens up a week, a window for a technical bounce. But, the Fed, we know the strong dollar breaks the world, and the Fed has told us plainly that they think, everybody's freaking out, market's down 20, 30%. And the Fed is telling you the market is receiving our commentary nicely. It's reacting well. They've told you they want asset prices lower. So unless you see stuff, the bond market breaking or things being unorderly, they're not stepping in. So I think we still have to differentiate between short-term technical bounce and which could be anywhere from 3,900 to 4,200. It doesn't change the fact that, looking down, everything looks like we probably still have to trade lower. And unless something changes, you probably don't want to even think about putting 401k money to work unless we're back down 3550, 3500. But I think everybody pretty much agrees on that. That's nothing new.
Yeah, that, everyone's looking for this 50. They're all looking for
200-week moving average, confluence of the COVID low, 50 back. Everything's pointing to that level.
Right. Right. So that's what everyone's looking for is.
And the Fed has told you they want asset prices lower. So
yeah. Okay.
I think I always say long price action, short bias. I always have something in the back of my mind, what could happen, what the Fed could do, what about earning seasons, what about this? But ultimately, I have to force myself to say, I don't care because I don't have a crystal ball. I'm just going to trade with a, if this happens, then that is likely to happen mentality based around what price is doing, not what I think it should do. And the day I stopped doing that, and I started doing that, and I stopped trading what I think was going to happen, my trading changed a lot.
Okay.
It's as hard as you want to make it. It's that Ed Seykota quote. Everybody gets what they want ultimately because it's as hard as you want to make it. Some people never understand what that means, but it's as hard as you want to make it.
Well, I knew a guy on the floor at the CME who used to, fade banks, central banks in the currency pit. And his favorite expression, and, I think it'd be a great tagline for what you talk about, it's be a machine.
Yeah. It's people are far too worried about trying to understand why something is happening rather than internalizing and taking actionable trades around what is happening. Exactly. It doesn't matter why it's happening really, especially if you're trading intraday. What's happening.
If you want to do that, you don't have to be a trader. You could be a reporter.
Exactly.
Right? Go on CNBC and after the fact, explain to everyone what the traders knew before it happened. So
who was it? I think it was, I don't know if you follow Jimmy Jude on Twitter.
I don't know.
I'm probably going to butcher this, but I think he's down on the floor, ex-floor trader. I think he said like one of the biggest traders in the Deutschmark pit back in the day.
Bregman.
Or something like that. He thought the Deutschmark was like, I don't know, Holland's currency, right? Because it was kind of Deutsch, something like that.
I didn't even know.
Yeah.
Yeah.
Half the pit traders I know, if you ask them what anything, if you ask them what NFP stands for, they might not even know.
Yeah.
But they're trading 7-figure accounts. You know what I mean?
I do.
Well, you probably know better than me.
Yeah. And you know what else? They didn't have to be a portfolio trader either. They knew one market like the back of their hand and they never strayed from that pit.
But what I say is, I've been doing this a long time. I've been reading sell-side analyst notes for like 20 years, listening to very smart people speak, pontificate, etc. And most of the time, everybody's wrong. Not because they're stupid, it's because it's hard. This, and stuff just happens. So as a private retail trader, don't make it harder than it should be. If a handful of PhDs can't figure it out, chances are you're better off trading levels. And all the people that sound smart and that are on the speaking circuit, yada, 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 I hate to say it, if they were good trading, why would you be away from your family doing like speaking circuits, or you'd be at home in your shorts with your guitar next to you, your putting mat next to you, trading.
You know that the sponsor of Trade GateHub, TradeView, that whole firm was built on down days, buy what's green, made them a fortune. It's all relative strength, man. So, I believe simple is powerful. How about you? We complicate things.
Everybody tends to complicate things, make it harder than it should be, because probably traders who aren't successful don't want to accept the fact that they're not getting the basics right. So rather than say, accept that it's their own failing as a trader, it's easier to say it's something super complicated that I still haven't learned yet. It's a system somebody hasn't told me. It's an indicator somebody hasn't sold to me. It's something secret. Whereas it's very hard to accept that it's just looking at price moving around between levels, and that it's far more basic. It's about
learning to recognize when you have a signal.
It's about
learning to
number
recognize when you sit on your hands, which is really what we're paid to do. That a lot of these setups,
most of it's like fishing or surfing. Most of the time you're waiting, but even before that, it's what I always say is most people are doomed to fail, not because they're stupid, simply because they have unrealistic expectations. The best example is most retail traders will come out and say, well, what's your expectations? Like, oh, I'm going to make 20% a week or 20% a month or whatever, right?
Yeah.
And you say, well, first of all, it's not possible, but put that into a spreadsheet and actually look at what you're saying. If you made 20% a week or 20% a month, you would be a billionaire before you could blink. So you can't. It's not possible unless you're taking crazy risk. You might, but it's not sustainable. You have to trade smaller. And they'll say, oh, but I can never make enough to live then. And the answer is yes, but the problem is not the return. The problem is that you're undercapitalized.
Right.
So people are undercapitalized to start. They have unrealistic expectations for what they can make. Therefore, they trade too high leverage, and it's a mathematical certainty that they will blow up. It's not because they're stupid. It just doesn't work. So
50, you don't know. I've been asked that question many times. Dale, coach, can I trade for a living with $10,000 in an account? And I go, yes, if you want to live under an underpass.
It's not going to happen.
Yeah.
And so, most of them have 2 ex-wives and a golf membership they want to pay at the same time. That's the problem is, but the whole industry is set up to want you to trade leverage or to sell the dream. And the reality is it's very feasible, but you have to be properly capitalized.
Yeah.
And,
and most aren't. So,
and if the best investors in the universe have a compound,
20% a year, they're doing
over 30 years, whatever.
Yeah.
As a retail trader, thinking you're going to be making that a month is just completely delusional.
Yeah. Yeah. I think that even Bobby Axelrod would say that.
Yeah. So, you have to have realistic expectations. And that also goes with the market. If you're coming in, you're like somebody's coming in and saying, okay, I'm going to scalp 100 pips on euro today. Well, if it's moving in a 20 pip range, it ain't going to happen. You can't trade the same way or the same size or with the same expectations, something that's trading, when the ES trading a VIX at 35 or 10. So,
all right. Well, you've laid out so many pearls, 50, I could string a necklace for June Cleaver on Leave It to Beaver. All right. And great to hear your voice, and there's still passion in it. You're laying out, you just want people to face the facts. And, I say that trading is not for lazy people, that it's hard work and you have to live through adversity. And if that scares you, find something else to do.
There are a lot of great things to do with your life. And if you have to be miserable and lose money, there are funner ways to do that than trading.
Yeah. And I really enjoy talking to guys like you, and it's been such a long time, 50. I'm really want to thank you for taking time out of your day to address our community and talk to me and, lay out some things that are happening in the markets. So this is a great video for any trader to listen to, that he'll see or she'll see their self in some of the things that we brought up today.
Thank you so much, Dale. And whenever you do these and I'm not doing a webinar, I'm always happy to come on and spend some time with you. It's always fun. Thank you so much for inviting
my
me
trading warrior brother, 50 pips. And
Take
I
care.
hope
All the
everyone
best.
enjoyed it. And I did. So have a great day. Thanks, 50.
You too. Thank you so
Appreciate your
much.
giving spirit.
Thank you.
Adios.